Well, the South African Rand is trading a little firmer, but still around a 22-month low. Investors are still digesting the above-expected 13-year high domestic inflation rate. Viv Govender is portfolio manager at Rand Swiss with us now for market update. And let's look, Viv, good afternoon, at how things are going. The Rand, as I was saying now, hanging on to some gains. What's influencing its movements?
Well, we had some inflation numbers come out earlier today for South Africa. They were pretty high, the highest we've seen in over a decade. And quite frankly, I think the market, to a certain extent, thinks that that's going to push the Reserve Bank to be a bit stronger, a bit firmer with regards to a rate hike decision, more on the higher end than the lower end. And I think that's probably positive for the rand at the moment. And that's one of the reasons we're seeing it blue at near day highs at the moment. But still, remember, it's still weaker than 17 to the dollar.
And this inflation figure, surging to a 13-year high, how much of it was a surprise?
Look, we know that the global inflation numbers are pretty, devastating at the moment. There's pretty much nowhere in the world that's escaping it. You get some strange numbers at a place like China, but, if you look at pretty much everywhere else in the world, from Europe to, which was India to America to Nigeria, you're going to find that, interest rates are inflation rates are pretty high. If not at close to, multi-year, if not multi-decade highs, driven by the same kind of international global factors, oil prices, fuel prices, and food prices.
And we're due for an announcement from the Monetary Policy Committee about interest rates. That's tomorrow. Now that we've got this inflation figure out, are we clearer then about our expectations ahead of tomorrow's update?
I think the Reserve Bank is probably going to have to be aggressive. The argument is 50 years.
All right, I think we've lost our audio connection to Viv. We've got you back, Viv. Just take it from the top. You're talking to us about expectations and what the Reserve Bank will have to do tomorrow.
Yeah, look, the Reserve Bank is probably going to have to be aggressive. Even if we didn't have, this number coming through, remember, the dollar is very strong against the rand because the U.S. is raising interest rates quite strongly. Most commodity prices are denominated in dollars out there. If we don't kind of at least try and keep up to a certain extent with the U.S. dollars, high interest rates, eventually the rand will weaken. That will cause inflation anyway because, we import a lot of stuff, especially fuel. So I think the Reserve Bank needs to be pretty aggressive and at least follow what the U.S. is doing at the moment.
Let's have a more international look now, a different issue. The African Development Bank has approved that $1.13 billion funding. That's for 24 African nations in order to be able to mitigate rising food prices as well as inflation, which we're trying to also address. Tell us about how that's going to work.
Look, that's an absolute necessity. Africa is one of the poorer places in the world, and when you go to a poorer place, you tend to find a larger percentage of your income being spent on food. So compared to, for instance, somewhere like the US, where less than, say, 10% of income is spent on food, in parts of Africa, it's closer to 50% of income spent on food. You increase food prices 10-20% in that environment, and that puts a real damper on your ability to survive effectively, to put it mildly. And so this is necessary to actually ensure not just people make it through the inflation period with a bit of comfort. This is, in certain cases, a question of survivability. We've seen reports from the UN, from other international bodies, basically talking about the fact that we are seeing effectively a very, very tough period of time for the next year at least, with regards to food conditions where maybe hundreds of millions or more people are going to be food insecure than are currently, and maybe even some moving towards a condition of famine. In terms of what that means, especially for a country like Africa, it could mean, decades of setbacks for some countries out there if they do have to go through such a crisis. You saw the Economist, article a couple of months ago, actually, I think by now, was called The Coming Food Catastrophe. So this is known that food prices are way too high and inflation is way too high to be affordable for some people. And so obviously a move like this may not be enough, but it's certainly the right move in the right time.
Viv Govender, always good to speak to you. Thank you very much. Viv is with Rand Swiss.